Welcome to FOMO Consulting for your daily AMC stock analysis video on Thursday, July 1st. Ladies and gentlemen, there is a big breakout coming, and I'll show you very shortly. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you so very much. Let's start with a quote. The longer we wait, the more we will rise. Patience, my friends. By one of my earliest supporters, Party Puppy. Thank you, brother. Appreciate it. Let's look at the broader market. So overall, all four major indices were up. S&P was up 22, Dow up 131, NASDAQ up 18, and Russell up 18 as well. Overall, lots and lots of green. Tech had a pretty good day overall. Blue chips had a great day. Not a whole lot to complain about from the broader market. So let's look at crypto. Overall, crypto having another volatile day. Not too terribly bad, but a lot of red, as you can see. Overall, last few weeks have just been quite volatile for crypto, but longer term, just in my personal opinion, certainly not financial advice, I think crypto will be just fine. Well done as always to the German apes. They closed at 45.64 euros, down 3.28%. As you can see, the pull down, the bleed off on the chart certainly mirrored what we went through today. So let's get into the AMC chart for today. We closed at $54.22, down $2.34, 4.14%, and down just a bit after hours. As you can see, pretty much from the opening bell, it was just a slow grind downwards. But yet again, we got to the $52 level and bounced, and we recovered quite a bit towards the end of the day. But overall, today was just a very low volume day, slow bleed down. I personally am not concerned whatsoever. Let's get into a few more of the technicals here. So let's look at what a breakout is. You know, there's a lot of things about the wedge, the flag, whatever you want to call it, that we're in currently, and we are near the end of it. So a breakout with relatively high volume shows conviction and interest. Therefore, the price is more likely to continue moving in the breakout direction. Breakouts on relatively low volume, generally prone to fail, which is the old fake out breakout, right? So again, just a diagram over on the right, you can see what a true breakout is, and obviously getting above the $14 level and then rocketing into the $20 levels and certainly up to the 70s, that was a true breakout. So let's look at the chart. As you can see at the very end of that wedge, you can see where they specifically, in my personal opinion, they wanted to bleed that down below that the wedge pattern. I believe it's a scare tactic today. It was a very slow bleed. They know that this is a particular pattern that a lot of people are looking at. So if they could bleed it down below that, they can certainly make it appear as if it's going to, obviously have a bearish downturn and probably scare people out of their positions. But again, very low volume, which shows very low conviction. We bounced yet again at $52, and I'll show you why that's very important. As you can see, the volume was extraordinarily low today. We are definitely got to the oversold area. We bounced, and again, the MACD is certainly downhill. So let's look at the 30-minute chart. Yet again, pressed it below that wedge pattern. Again, I believe that is quote-unquote a fake out breakout. I believe we will move in a bullish direction. I'll show you why very shortly. So let's look at it from a bigger picture. On the 1 hour chart, you can certainly see, again, fake out breakout, in my opinion. Very low volumes, lack of conviction. It was just a slow bleed down, and then we bounced and we're heading back in a bullish direction. So if you look, again, the price action has just been in a consolidation period. We have bounced off of that $52 level quite a few times. A lot of support there. I am not concerned about it. Certainly the RSI and MACD is going downhill, which is a hidden bullish divergence, which usually starts or causes a breakout to the bullish side. And as you can see, again, low volumes. So again, I'm very, very bullish around this chart pattern, me personally. So I want to show you a different viewpoint of it. Certainly, this is a different line pattern. So you can see over the last several days, we've just been in a consolidation period, that $52 level, 54, that area. We've bounced around it, just consolidating, no big deal, but price overall has remained flat. Obviously, RSI has been in a downward trend, and so is the MACD, which again is hidden bullish divergence. And as you can see that there's been a severe downward trend on the volume as well. So let's look at the 4-hour chart. Again, it broke down below that ascending level of support on the flag pattern or pennant, whatever you want to call it. But I believe that, again, that is a fake out breakout. I do believe we will trend upwards very, very soon. And as you can see, we've been bouncing around, holding a strong level of support around that $52 to $53 area. And certainly you can see RSI trending down and the MACD is trending down. Again, hidden bullish divergence. And if you stop and think about really the last 2 or 3 weeks, if you look at all of that red volume on the MACD, on the volume candles, the daily candles, look at all of the heavy shorting, the heavy selling pressure. All of the indicators are have been heading in a bearish direction. But the price has not responded to that heavy selling pressure and moved in conjunction. It is held flat, which means we have a ton of support. Again, the alligator is just chilling, still got his mouth a bit open, but I believe we'll shove some hedgy burgers in it very, very soon. As you can see, the price pattern, again, is relatively flat. RSI downhill, MACD downhill, and volumes have fallen off substantially. So again, let's look at it from a different perspective. 1-hour chart, you can see over the last really 2 or 3 weeks, we've just been bouncing off of that $53 to $54 level. Every time we do, we head back up in a bullish direction. I believe personally tomorrow it should be either flat or bullish, but I believe next Tuesday will be very, very, very important. Just my personal opinion. And again, you can see the volume has just trended downwards substantially over the last 2 or 3 weeks that we've consolidated. RSI, we've bounced around this level, and every time we do, we obviously have a bullish response to that. And the overall trend of the MACD has been bearish. Again, hidden bullish divergence. And as always, the diamond hands are holding this up. They, again, with all of the selling pressure, all of the heavy shorting, everything we've been through, they can't get the price down. So all of the indicators have gone down, but the price has remained flat, which means there's a lot of buying and holding, right? So let's look at GME. I believe GME is in a very, very similar pattern, and it is poised for a massive reversal. Again, you look at the overall trend of the stock has just been pretty well consolidating and flat. Volumes have been going down, RSI down, MACD going down. You can certainly see the hidden bullish divergence. So bonus quote, the best things in life are free, but you can't keep them for the birds and the bees. Now give me money, that's what I want. From the Beatles, contributed by Grumpy Dave. Thank you, Dave. Appreciate it. So the retail sector generates big returns for the first half of the year on reopening hopes and Reddit buzz. Very bullish article, one of the very few you can find around AMC or GME these days, but certainly not too bad. So this is a heck of a 24 hours. Fed sees Robinhood CEO's phone as part of GameStop trading probe from earlier in January. Robinhood files S1 to go public and IPO. Robinhood to pay $70 million in record settlement with FINRA. That is a full day. Michael Burry reported says Reddit favored meme stocks will crash as new money dries up. I agree with this 100%. After the squeeze, it will dry up after the squeeze. Let's look at the short interest data here. Overall, shares owned loan down just a bit, but no big deal. Still at 95 million. Cost to borrow about the same, 2.13 utilization, hovering around the same, 87%. Short interest change down just a bit, still very high at 18%. And shares returned today 1.93. They borrowed basically 1.5 million, so essentially net neutral. And 432 institutional owners, 392 are long only. So we have 392 long only whales on our side. We'll see how tomorrow plays out with the options at stake. Total volume today was down yet again at 57 million, quite light for AMC of recent, but again, I think this is a bullish pattern as we get ready for a trend reversal and a big bullish breakout. Just my opinion. Short shares available, 1.3 million according to Fintel, borrow fee 1.17. So let's look at the short interest trend data here. As you can see, not too awful much change, a little bit downward, obviously, with the short interest going down just a hair. Not sure I quite buy that. I'm sure there's some of the shares going in, deep in the money options, what have you. Overall, fundamentally, nothing has changed. The own loan average age for short positions has actually gone up as of yesterday, 35 days from 33 days. So 2 more days added, which means they're sitting on those positions. I think that's very bullish. Let's look at the options. So we're currently obviously in that $54, $55 range. You can see the accumulation of open interest at that level. I believe tomorrow 58 will be a battleground. 60 will certainly be a battleground. We'll see how it plays out. 65, who knows? That would be exceptional. And 70, again, a lot of open interest. But I certainly believe that 58 to 60 level will definitely be in play. So again, the call put ratio still very bullish, 1.4 to 1. Coming a little bit more neutral, at least as of today. Total volume right around 834,000, close to a million, a little bit lighter, obviously, with overall volumes being lighter. Some big trades, obviously, going on, but nothing too terribly crazy. Always fun to look at, certainly. And nothing fundamentally has changed there. And pre-timing, at least through yesterday's trading, it actually predicted somewhat of a flat day and then bullish throughout the next 10 days. So we'll see what today's pre-timing looks like. Again, it's just a tool. It is fun to look at. You never know what's really going to play out, but overall, not too bad. And yes, I bled today just like you. Diamond hands to the end. No big deal. So let's close with a quote. We are an impossibility in an impossible universe. Ray Bradbury. These words, I believe, are very true. The overall financial universe does not want us to succeed. We are an impossibility in a very impossible world, an impossible universe, in the stock market, but I believe more than ever we will win. We are completely convicted. We are diamond hands, and we are apes, and we are retail investors, and we are winning. So I hope you found this video informative, entertaining. If you did, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate support. But as always, I hope your life is full of green candles. I'll talk to you soon. See ya.